Hey traders, ikaze ku muntu wese ubashije kuganira kuri ino channel. Iyi ni video yacu ya kabiri ndetse uri kubona hano ni download effects. Tugiye kuba twabasha kuba twasubira bimwe mu bintu twabonye byo nasomye mu gitabo bita candlestick trading bible cy'uwo bita Munehisa Mama, aho yacyanditse mu kinyejana cya 18. Yari umucuruzi w'umuceri, niwe wanditse iki gitabo. So mugire impungenge abantu batazi icyongereza, hari bimwe mu bintu tugiye kujya dusoma mu cyongereza ndetse tukaza kuza kubisobanura mu kinyarwanda. So ni amahirwe ku muntu wese uri bubashe kuguma hano akareba ino video ikarangira, biraza gutuma kugira ubumenyi kuri forex trading, ndetse waba utangira ndetse waba usanzwe ukora forex, ibi ngibi hari ibyo uzi kungukiramo hano. So we're going to start in English. Welcome to the channel where we simplify forex and help you level up your trading game one candle at a time. If you are tired of using jargon and you want to learn how to actually lead the market, you are in the right place. We are going to break down the key elements that a successful trader needs to master. So the book that we are going to use, it is called the Candlestick Trading Bible, which is being written by the Japanese guy, which is called Munehisa Mama, where he wrote it in the 18th century. He was a Japanese nice trader. So here are the things that we are going to talk about. The first one is candlestick anatomy. The second is candlestick pattern. Third is candlestick the market structure. The fourth is time frame and top-down analysis. The fifth is the trading strategy and tactics. The engulfing ball strategy, the inside ball strategy, the inside ball first breakout strategy, and we are going to get examples of real generative examples. So there are two questions here that anyone can ask him or herself, like why candlesticks are important to your trading analysis. So the answer is candlesticks are important to your trading analysis because it is considered as a visual representation of what is going on in the market. So the second question is what is candlesticks? Like whoever don't know about anything about forex is starting to ask himself what is candlesticks. So candlesticks are Japanese candlesticks are formed using open, high, low, and close of the chosen time frame. So we're going to explain this in Kinyarwanda very bit. Hano hari ibibazo bibiri bibaza biti se candlesticks ubundi kubera icyo ari ingenzi muri trading analysis yacu cyangwa se mu gukora analyse yacu ubucuruzi. So igisubizo kikagira kiti candlesticks ni ingenzi kubera ko zidufasha muri analyse mu kumenya ibigaragara mu isoko ryacu, kumenya se ni iki kiri kuba mu isoko ryacu muri aka kanya. Nicyo ngicyo candlesticks zidufasha. Umuntu nanone akongera akibaza se candlesticks ubundi ni iki? Candlesticks ubundi ni zakozwe n'Ubuyapani nk'uko nabibabwiye, ndetse zibasha kuba zakorwa hakoreshejwe gufungura, gufunga hejuru no hasi. Turagenda tubireba bigiye bikurikiraho. So these are the drawings where you can see the two candlesticks which are different in colors. So as we can go through this very fast, this is the bullish candlestick and this is the bearish candlesticks. The bullish candlesticks are used for buy and the bearish candlesticks are used for sell. So the bullish candlesticks they go in the uptrend. That's why you see they open here and they go up, they close. So this is the high, this is the low, this is the lower shadow or the wick, and this is the upper shadow or the upper wick, as you can call it. It is being called by different names. So this second candlestick, it is called the bearish. The bearish candlesticks we use the for sell. So they go in the downtrend. So they are being open here, they go down and they close. This is the psychology. They open here and they go down and they close. So it is different from this one. This one is being opened here and being closed here. This is the low, this is the high. This is the upper shadow, this is the lower shadow. As you can see. So let's explain these words. This one is the white candlestick. If the cross is above the open, we can say that the candlestick is bullish, which means that the market is rising in this period of time. The bullish candlesticks are always displayed as white candlestick. Yeah, so this is what we were explaining. The most trading platform use white color to refer the bullish candlestick, but the color doesn't matter. You can use whatever color you want. So this the most important is the open price and the cross price. If the cross is below the open, we can say that the candlestick is bearish, which indicates that the market is falling in this season. Yeah, the bearish candles are always displayed as black candles, but this is not the rule. So back here in kinyarwanda ni ukuvuga ngo iyi mubona hano ni candlestick. Iyi isa umweru isobanura ko ari bullish, iyi isa umukara igasobanura ko ari bearish. Iyi ngiyi ijya muri uptrend, iyi ngiyi ikajya muri downtrend. Ni ukuvuga ngo iyi ya bullish kubera ko ari uptrend ifungukira hano hasi nko kuri open, ikazamuka ikajya gufungira hano hejuru kuri close. Niho bitandukanye. Iyi ya bearish kubera ko ari downtrend ifungukira hano hejuru ikamanuka downtrend, ikaza hano gufungira hano kuri close. Niyo mpamvu yitwa bearish candlestick cyangwa se ari ikoreshwa muri downtrend. Iyi ngiyi igakoreshwa nka buy, iyi igakoreshwa nka sell. Yeah, nibyo ngibyo. So the candlesticks have different body size. So they are long body and they are short bodies. As you can see, there are short bodies here and there is these big giant bodies. So we will go through this and we will explain more about this candlestick body sizes. But as you can see here, this is bullish, big, and the small, and there's this bearish, small, and big candlestick body sizes. So there are another one of long shadows. This one is bearish, but it has the long shadow and a small body, and this long, short shadow here. And there is this long shadow which is on the down, long lower shadow and the short body. So we'll go through this and we'll explain more about this on the following pages. And the candlestick patterns. Candlestick patterns are one of the most powerful trading concepts. They are simply easy to identify and very profitable setups. Research has confirmed that candlestick patterns have a high predictive value and can produce positive results. Ni ukuvuga ngo mu kinyarwanda hano nk'uko twari tumaze kubivuga, iyi ngiyi ni body size yacu y'amakandlestick uko agiye atandukanye. Hari izifite amabody size manini, hari n'izifite amabody size matoya. Izi ni iziri bullish, izi ni iziri bearish. Hari izifite iyi long upper shadow aba ari bearish, iyi ngiyi ikaba ifite lower long shadow ikaba ari bullish. Tukongera tukajya kuri chapitre nshyashya tuvuga ngo candlestick patterns. Candlestick patterns ni ukuvuga ngo ni amwe mu mapattern cyangwa se ni candlestick zimwe zidufasha kuba twamenya ibintu biri kuba mu isoko, kandi ubushakashatsi bwagaragaje ko aya candlestick patterns zigira umusaruro cyane mu kuba zatwereka ibiri kuba mu isoko, ku buryo uyifashe nka signal bishobora kuba byagufasha cyane kuba wakorera amafaranga. The first one, candlestick pattern, they are called the engulfing bar candlestick pattern. There are two types of engulfing bar. They are bearish engulfing bar and there is a bullish engulfing bar. So let's talk about this bearish engulfing bar, which has a small bullish candlestick and this bearish candlestick which is in front. So the small body is bullish and the long body is bearish. This is the open price, this is the close. This is the drawing of the bearish engulfing bar, and where we can see in the chart as an example, you see here on the resistance, we can find this as a signal where we find a bearish engulfing bar on the resistance, and this is the clear indication that we have to short or we have to sell. We have to enter a sell order. So this is how it is. This is the use of bearish engulfing bar, and this is the clear signal. So let's talk about the bullish engulfing bar here. This is the image of the bullish engulfing bar, and this is example of a chart where we see a bullish engulfing bar here on the support, where we see the bullish engulfing bar, and it is the result of uptrend. This is the clear indicator or the signal, as you can call it. Yeah, so in kinyarwanda ni ukuvuga ngo nk'uko twari tumaze kubibona ama candlestick pattern yacu agiye atandukanye, harimo izo bita the engulfing bar candlestick pattern, harimo izifite ubwoko bubiri, harimo bearish engulfing bar na bullish engulfing bar. Ni ukuvuga ngo bearish engulfing bar igizwe na candlestick ebyiri, harimo aka gatoya ka bullish ndetse n'iyi ngiyi nini isobanura ko ari bearish engulfing bar. So uru ni urugero hano rugaragaza hano kuri resistance, igihe ubonye bearish engulfing bar aba ari entry nziza y'uko ugomba guselinga. So nk'uko mubibona hano yari entry nziza cyane, hari harimo sell iryoshye. So ni ukuvuga ngo bullish engulfing bar pattern nayo ni uku nguku iba imeze ariko muri opposite. Ahangaha haba hari candlestick ya bearish ndetse n'iyi candlestick nini ya bullish. Hano urabibona neza muri chart yacu, aka example twafashe hano kuri support aho haje kubonekamo bullish engulfing bar biza guhita bivamo uptrend. Yeah. So the other candlestick pattern is a doji candlestick pattern. This looks like a close, which the open price and the close price are on the same line. Like there is no body. You see, there is no body. So this is the highest price, this is the lowest price, this is the open, and this is the close. It is called the doji. It's used as a continuation, or sometimes it is used as a confirmation of continuation or a future reversal. Yeah, so as here we can see a doji, where we saw a doji here, and it was in a downtrend. It was showing that you have to be prepared that the trend is about to change. So this doji is like an indecision where we don't know very well if it is going to continue as a downtrend or there is a change that is going an uptrend. So here you saw a doji and it has continued down a little bit, boom, then it's an uptrend. So doji have to have a different other kind of doji patterns. This one is called the dragonfly doji pattern, and it's like this. It signs as a T. It has an image of a T, a letter T. So the close price and open price are on the top. There is no upper shadow. There is only a long tail, a lower long shadow. Yeah. So there is another one called the gravestone doji. This one is a bullish candlestick, and the gravestone doji is like this one. It is like inverted T, or a T which is turned upside down, and the open price and the close price are on the same level. So we're going to see here another candlestick pattern which is called the morning star. Morning star is being formed by 3 candles, a 2 bearish candle and 1 bullish candle. And the morning star is referred as bullish candlestick pattern, which is being formed by 3 candles, where we see these 2 bearish candles and 1 bullish candle. Yeah. So and there is this evening star candlestick pattern, where you can call it a bearish candlestick pattern. It is being formed by 1 bullish candlestick and 2 bearish candlestick. Yeah. So and there is another one which I love to trade. It is called the hammer or pinball. It's used as a good confirmation, where if you see it on the support or in the downtrend, it is a clear indication of the reversal, where we are going to see an end of the downtrend and the start of an uptrend. So this is the body of a pinball, and this is one of the examples in the chart where we saw a pinball. Here we were in the downtrend, but boom, the pinball was here. There is a reversal. Yeah. So there is another one called the shooting star, or a bearish pinball. A bearish pinball or inverted hammer. Many people call it by different names, but here in the chart, this is the bearish candlestick, where if you see this in an uptrend, it is a clear indication that there might be a reversal. So when you see this on the resistance, you have to be careful, because there might be a reversal to the downtrend. As you can see here, there was an uptrend, and boom, a reversal made by this candlestick called pinball or bearish pinball. So there is this one also called the harami pattern, which is considered as a continuation of the first when spotted in an uptrend. So harami pattern, there are two different haramis. There is a bullish inside bar harami, which is the mother and the child, the mother candlestick and the child. So this is the bullish inside bar. Yeah. So let's talk about the tweezer top and bottom. That is one of other candlestick pattern. Yeah. When you want to know more about this, you can see the link in my Telegram channel. I will give you the link. You can find the book there, and you can read more about these candlestick patterns and see more of them and more of the examples. So let's jump and talk about the market structure. One of the most important skills that you need as a trader is the ability to read the market structure. It is a critical skill that will allow you to use the right price action strategy in the right market condition. So here in Kinyarwanda we can say market structure ni imwe mu bumenyi bwiza ushobora kuba wagira nk'umutrader, kuba wabasha gusoma isoko ryacu ngo umenye ngo ese igishushanyo cy'isoko uko tubibona uko rimeze birava he bikajya. Ibyo bishobora kuba byagufasha mu gukoresha ya strategy yacu bita price action, mu kuyikoresha neza, kuba wabasha kuba wasoma isoko ngo ese ubu ngubu uko mbona isoko rimeze gutya ndabasha kuba nakoresha ya strategy yacu bita price action gutya. Bishobora kuba byagufasha rero iyo uzi gusoma isoko, ushobora kuba wabasha no gukoresha ya price action neza. So market structure have like these three different types. The one is a trending market. Trending market. Trending market are simply characterized by a repeating pattern of high and higher lows in an uptrend market and lower lows in a downtrend market. See an example here of a trending market. A trending market have two types. There is an uptrend and there is another one we will look at is called the downtrend. So in an uptrend there is a formation of higher high and higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So this is the clear indication that when you see this, when you have ability to see this market structure, that it is in an uptrend. You can tell that this is the you have to take advantage of buys. There is an opportunity of buys. Yeah. So whenever you see higher high, when you see a market making higher high, you make a trace, higher low, make another higher high, make a higher low. This is the clear indication that we are in an uptrend. So this is the example in the chart where we can see the market is making the uptrend. High high, higher low, high high, higher low, high high, higher low. High high, higher low, high high, higher low, high high, higher low. Yeah, this is how it is in the market. So there is another one we talked about. It is called a downtrend market. The downtrend market is when you make a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Yeah, that's how it is. That is the downtrend. And whenever you see the market going down and forming these higher, lower highs and lower low, it is a clear indication that we are in the downtrend, and we have to look the opportunities of sales. Yeah. So this is the example of a downtrend where we are seeing a lower high, lower low, 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 lower high, lower low. Yeah, this is an example of a downtrend in a chart. So how to trade a trending market? Umuntu uwo ari we wese ashobora kuba yakwibaza se uko tubonye downtrend na uptrend ni gute umuntu yabasha kuba yacuruza cyangwa se ni gute umuntu yafata entry muri downtrend cyangwa muri uptrend. So if you can identify a trending market, it can be easy for you to trade it. If it is a bullish market, you look for a buying opportunity because you have to trade with the trend. If the market is bearish, you have to look for selling opportunity. But the question is, what is the right time to enter the trending market? This is a good question. Umuntu wese ashobora kuba yakwibaza se ni ryari umuntu ashobora kuba yakwinjira muri trending market cyangwa se ni ryari umuntu ashobora kuba yakora entry. So trending market are characterized by two important moves. The first move is called impulsive move, and the second is called the retracement move. yeah, let's explain more about this. So as you have saw, this is the uptrend. We are moving up. So in this, we are seeing impulsive move and the retracement. So the impulsive move is that move where we see the candlesticks are going up, and the retracement is that move where we see candlesticks are going down a little bit and continue to move up. So the up move is called impulsive move, and the down move is called the retracement. The up move is called impulsive move, the retracement, the impulsive move, the retracement, the impulsive move, the retracement, the impulsive move. So when we can say this is the downtrend market, this is when we say when candlesticks are going down, they're going up a little bit, they're going down, they're going up a little bit, they're going down, they're continuing down. So this is impulsive move, retracement, impulsive move, retracement, impulsive move, retracement, impulsive move, retracement. So how to trade here? I'm going to show you how you can trade in this trending market. So here in an uptrend, you see the impulsive move in an uptrend. When we get here, we can't have an entry here in an uptrend. Even if we see that it is an uptrend, we are going to take a buy. You can't come here in an impulsive move and make an entry, because at the time you make an entry, you will get ejected. The market will throw you out. You will lose having an entry here or a retracement. So we have to wait for the market to make a retracement here. We always take our entries on impulsive move. Abantu mwese b'abatrader ushobora kuba muzi ibijyanye na trading cyangwa se babigina. Umuntu wese ushaka kujya afata entry yiwe ahantu heza ni ugukoresha impulsive move. Impulsive move muri uptrend. Ahangaha niho ubasha kuba wafata entry yawe igihe impulsive move zitangiye. Iyo ubonye retracement irangiye, ahangaha impulsive move ni ufatira entry kugira ngo ukomezanye na impulsive move na uptrend. So ntabwo ushobora kuba waza hano ngo ugiye gufatira entry hano retracement cyangwa uri mu murongo mwiza, kuko urwego isoko ritari manuka kandi n'ubundi niyo byaba biri muri uptrend, so ugahita kuguza. So ni byiza gutegereza retracement ikirangira ugafata entry yawe ukajyana na impulsive move. Aha turavuga muri uptrend. No muri downtrend no. So ni ugutegereza impulsive move aho isoko rimanuka, retracement rirazamuka kandi turi muri downtrend. So ni ukuvuga ngo ni ugutegereza gato, ugategereza aho impulsive move itangirira ufatira entry yawe ukabasha kuba wasevinga. Yeah. So let's talk about the support and resistance. Support and resistance are proven areas where buyers and sellers find some of equilibrium. They are major turning points in the market. Support and resistance are formed when price reverse and change direction. The price will often respect these support and resistance values. In other words, they tend to contain price movement until or once price breaks through them. So ikijyanye na support na resistance ni ukuvuga ngo ni ahantu isoko ryacu tubona price yagiye igera ntiharenge, bikagaragara ko aho hantu yahageze inshuro imwe, ebyiri cyangwa eshatu ntiharenge, ikongera igasubira hasi. Niba ari muri uptrend, ikaba yabasha kuba yaza ikagera kuri major turning point, yarangiza igasubira ikongera ikabasha kuba yagaruka, ikabasha kuba yasubira. Reka tugende tureba ingero za support na resistance. Nk'uko mubibona hano, iyi ni resistance, iyi ni support. Ni ukuvuga ngo support ni ahantu hacu isoko riraje riramanutse ariko ntiriharenze, rirongera riramanutse ariko ntiriharenze. Aha niho tubaha support, tukabasha kuba twaca abacu support. Ahangaha naho hejuru isoko ryaraje ntiryahari, rirongera riragaruka ntiryahari. Ni ukuvuga ngo aha hantu ni kuri resistance, aha hantu ushobora kuba yafatira order. So as you can see here, this is the resistance area and this is the support. This is the clear image of the chart where we can identify the support and the resistance. We look for sales on resistance, we look for buys on support. Ni ukuvuga mu kinyarwanda hano kuri support niho dufatira entry za buy, ndetse hano kuri resistance niho dufatira entry za sell. Nk'uko mubibona namwe hano, umuntu washobora gufatira entry hano ya sell, umuntu washobora gufatira entry hano ya buying. So how to draw a trend line? To draw a quality trend line, you will need to find at least two minimum swing points and simply connect them with each other. The levels must be clear. Don't try to force the trend line. So ni ukuvuga ngo hano nk'uko nari maze kubivuga, ntabwo ari ngombwa ko ugahita usenga So here on the breakout, and we see this where the price have broken our support. This is what we call a breakout. So we don't just set just like that because we see the price have broken the support. Now we can jump into the market and say we are going to sell. That's a mistake that many of the traders do, and they always be catched up right then when they make entries. They stop that when the price make what we call a pullback or a retest on the same support that it has broken. So their advice is that you have to always wait for a pullback and then you catch the clear move. So it's the same as here on the support. The price always can break the resistance and it always comes back to make a retest so that it can have a clear movement. So the advice is that you always need to wait for a pullback. Mu kinyarwanda no kuvuga ngo buri gihe tubonye price yacu i-breakinze ya support cyangwa se resistance, tuba tugomba gutegereza igakora retest cyangwa se pullback, kubera ko iyo uhise winjira mu isoko ako kanya, iyo pullback ijemo ihita igukuramo ugahita uhomba amafaranga yawe umaze gushyiramo mu gihe gitoya. So inama ni uko ugomba kubanza ukarindira hakabaho retest cyangwa se pullback. So here we're going to have what we see as a time frame and top-down analysis. The time frame or a top-down analysis, it's a method. It's a method we always use. As a price action trader, your primary time frame is the 1 hour, the 4 hour, and the daily. The price works on a bigger time frame. If you try to trade pin balls or engulfing bar on the 5 minutes time frame, you will lose your money because there is a lot of noise on smaller time frames, and the market will always generate a lot of false signals of the hard battle because the bears and the bulls, between the bears and the bulls. Ni ukuvuga ngo muri no top down analysis yacu, twebwe nk'aba price action trader tuba iyo twakwita ngo time frame yacu iri primary ni isaha imwe, amasaha ane ndetse no munsi. Ni ukuvuga ngo iyo ugiye gutradinga izo bita pin ball cyangwa se engulfing ball muri time frame y'iminota 5, ugura amafaranga yawe kubera ko haba harimo urusaku rwinshi cyangwa se haba harimo ibimenyetso byinshi bitari byo bya hagati ya bears na bulls, hagati y'aba buyers n'aba sellers. Besides, there is no successful price action trader who focus on one time frame to analyze his chart. Maybe you have heard of the top-down analysis, which means to begin with the bigger time frame to get the bigger picture, and then you switch to the smaller one to decide whether you buy or sell the market. Ni ukuvuga ngo ushobora kuba warigeze kumvaho analyse bita top down analysis. Ni ukuvuga ngo ni igihe uba wafashe time frame nini ukaba wayikoraho analyse ikaba yagufasha kuba wajya no muri time frame ntoya. Buri gihe dukoresha time frame ebyiri. Ni ukuvuga ngo ukora analyse muri time frame nini aho turebamo za trend line, za key levels n'ibindi bitandukanye, ukabasha kuba wamanuka ukajya muri time frame ntoya akaba ari ujya gukorera entry yawe. Let's say you want to trade the 4-hour chart. You have to look the weekly chart first and then the daily chart. If the weekly chart and the daily chart analysis align with the 4-hour, then you can take your trade decision. Ni ukuvuga ngo niba ushaka kuba wa tradinga muri time frame y'amasaha ane, ugomba kubanza kureba muri time frame y'icyumweru ndetse ukareba no muri time frame y'umunsi, kugira ngo urebe neza ko ibiri muri time frame y'icyumweru n'ibiri time frame y'umunsi bijyanye n'ibiri muri time frame yawe y'amasaha ane. So ukaba wafata icyemezo cy'uko wabasha gukora trade zawe. Ngira ngo byinshi bijyanye n'uko umuntu afata ama trading ndetse n'ibindi bitandukanye nzagenda mbibereka muri video ikurikira, aho tuzagenda turushaho kumenya ese ni ryari umuntu afata entry yacu, ni ryari umuntu afata buy, ni ryari umuntu afata sell, ese agendera kuki. So back in English, here is the end of our lesson. So in the next video we are going to see how a person can take an entry, how you can have opportunities of buys and opportunities of sales, and what are the confluences, what are the chart patterns, what are those pin balls and engulfing balls, how do you take them as signals so that you can make your entry. So thank you. If you have watched this video and you have reached to this time, it seems like you have liked our video, so you can make a subscribe, and so that we can always be together. So stay in touch. Ikindi umuntu wese utumva ibintu bijyanye na forex, namugira inama yo kujya areba amavideo yanjye, kubera ko hano ndabibasobanura neza kandi nkabishyira no mu kinyarwanda mu buryo bworoshye. So reka tuzabonane ubutaha. Peace.